So I'm the only member of the committee here, it looks like. But since we're not taking any action, Jerry, I don't think that is an issue, is it? You're on mute, Jerry.
Okay. No, it's not a problem.
Okay.
Hey,
Well,
good afternoon, guys. Everybody.
so since it's 2 o'clock up and down and we're not taking any action on anything, I will call this meeting of the Finance and Audit Committee meeting to order at 2 p.m. September 9th. Ebony, would you call the roll, please?
Sure. Chair Rogers, Trustee Benavidez, Trustee Foyt, Trustee Whiteley, Trustee Waugh,
And I am here.
and I also see Trustee Dukowski for the record, and also Trustee Sanchez.
Welcome, Trustee Dukowski and Trustee Sanchez. Agenda item number 2, public comment. Topics raised on this item must be limited to matters on today's agenda. Ebony, do we have any public comment?
No, we do not.
Okay, given that we have no public comment, I will close public comment. We will skip agenda item 3 because we don't have a committee present to accept the agenda. So we'll move on to new business. Item 4A, update on the district's financial operations. Mr. Cabayas.
All right, thank you, Chair Waugh. I wanted to give the committee and the trustees a update on where we stand with financials since the fiscal year end 2024 ended on June 30th. And I'll start by going over the Nevada New Markets Jobs Act. In March 2024, staff closed a new markets transaction for the West Las Vegas project that netted a benefit of $6.5 million of new markets funds that are going towards costs of the West Las Vegas library project. And the NNJA program is the Nevada state version of the new markets program. And staff and its partners have been actively pursuing these funds under the state program. And Ryan Kenter with Crescent Growth Capital is here with us today. Crescent Growth Capital has been a partner of the district for the last 7 years. They've been promoting projects from East Las Vegas to Mesquite and now the West Las Vegas Library Project. And him and his firm have been instrumental in establishing partnerships with community development entities, CDEs, across the country. And so, Ryan, I'll turn it over to you to let us know where we are with the Nevada program.
Absolutely. Thank you very much, Floresto. And hopefully guys can hear me okay. Again, this is Ryan Kenter. I also have Troy Villafera with me in the office. We're with Crescent Growth Capital. As Floresto mentioned, we were the New Markets consultant on the first 3 library New Market tax credit transactions, including the one that closed in March of this year. Since that time, we've been actively talking to potential state CDEs ahead of when the applications were submitted, and took a number of those CDEs out for site visits, kind of in that dead period in between. And ultimately, when the state CDEs were notified of those awards the last week in July, they immediately came back to us and began sending us LOIs. Our goal in terms of the state new markets was to get hopefully close to 28 or 29 million in allocation authority, which we think will translate to somewhere between 2.8 to potentially another 3.8 million in subsidy for the library district. And at this point, we have secured 13 LOIs at 2.23 million in allocation each. And just to put that to the side for a second, when the awards were announced, 19 CDEs were designated to split 170 million in allocation pro rata, so that was 8.9 million each, and no more than 25% of any award could go into 25% can go into one deal. So on 8.9 million, 2.23 can go into one deal. So that how you get 13 CDs putting in 2.23 million each. But ultimately, we've gotten those LOIs. Those LOIs have been executed by Floresto and his team. The deposits have been funded, and it is our goal for the library district to also potentially secure some additional federal allocation beyond the amount of which we closed in March. So we're looking at potentially another call it 12 to 15 million in allocation. Those federal awards are slated to be announced sometime, I would say, in the next month. So for all of the state CDEs, they're fine now that the LOIs have been executed, deposits funded, to kind of just sit tight on the bench and wait for the federal awards to be announced. Once those are announced, if we get LOIs on the federal side, then we are off to the races to close a stacked federal new market tax credit plus state new market tax credit transaction. And on the federal side, if we are able to get, let's call it 15 million in allocation with a 15% net benefit to the library district, then you're looking at an additional, call it, I think that's about 2.25 million from the federal. So that combined, with the state is a pretty significant benefit for the West Las Vegas Library District.
Thanks, Ryan. I note here that the anticipated closing dates are between December 24 to January 2025. Is that still accurate? And is that the same timeline for the federal allocation or closing?
That would be certainly the goal. And as you guys can appreciate, the CDFI fund and the Treasury hasn't come out with a firm date when the federal awards are going to be announced. So if that moves closer towards the end of the year, we can always go back and get those the closing timeframes adjusted on the state side to where it's something that is reasonable. But the nice part here is, since we've already closed the first transaction in March, a lot of the lead time items that are typical to getting a new market tax credit transaction closed and kind of extend the closing time frame are already in hand. So, we're talking about phase one environmentals, brokers' opinions of value, appraisal, surveys, those type of things. Obviously, the West Las Vegas Library project is under construction, so all of those construction diligence is already there, and so that should certainly help with that type of time frame that we're looking at here.
Okay, and I just wanted to highlight for the trustees that the Nevada program is new to the library district. This is the first time that we've participated in the program, and the West Las Vegas project was well regarded and was really attractive to a lot of the CDEs and tax investors. So we're confident in the project itself, and it meets the objectives of the Nevada program. But at the same time, there is some diligence that's still happening. We are answering questions here and there to ensure that we can participate, and to what extent. Along with Ryan, I believe the CDEs are still waiting for approval from the Department of Business and Industry to actually verify they have allocation secured.
That's correct. So they were notified informally the last week in July. They should be getting their formal award letters this week and next. And then at that point, they will work with the investor who buys the state credits, which in this case is U.S. Bank. They will be working with them to do a number of kind of new market tax credit logistics. And without going into the weeds too much, that process will wrap up. It typically takes a month from the time the award letters are announced until that's done. And so that probably will, what we're hearing is somewhere around October 6th, that'll be completed.
Okay. And as Mr. Kenter mentioned, there's a lot that goes into closing one of these transactions. We just saw that recently with West Las Vegas, and that was a partnership with 4 community development entities and all of their representation, from consultants to council, and again, the financial institutions involved. And here we have 13 CDEs that are involved. And so, we are confident in pressing growth and all of our other partners in creating synergies and minimizing the costs there, because that is an endeavor for that many organizations to be meeting to work on one transaction. And so it could be costly, and that affects the net benefit that Mr. Kenter described. But regardless of the cost, it is a huge win for the district. And again, that's assuming that this does close as planned. We are still doing diligence and are answering questions, but we wanted to give the trustees an update at this time as to our progress. Are there any questions from the trustees?
Thank you,
All right.
So, and thank you, Mr. Kenter. Trustee Dukowski, Trustee Sanchez, Trustee Benavides, do you have any questions at this time?
No, but thank you for this information, because I think it's very important, and I appreciate just everyone explaining where we're at, because this is a new process for me anyways. It's been a while, so thank you.
Absolutely.
It's a new process for me as well, and I want to thank you for doing this.
Absolutely. And if you have any questions, Floresto has my contact information. Floresto, please feel free to share it, and as well as Troy's, with anybody who has any questions. We're happy to answer them.
All right. Thanks, Ryan. Thanks, Troy. Thanks for being here today. Have a great rest of your week.
Thanks. You too.
All right.
And then for the record, please note that Trustee Benavides has arrived.
Thank you. I was trying to get in, but the link wasn't up, so I apologize for the late arrival.
Quite all right. Welcome. We're happy to have you. Floresto, next.
All right. I wanted to give the committee an update on the financial statements for fiscal year 24. As I mentioned, the year ended recently on June 30th, and staff has been preparing for the financial statement audit over the summer, and the audit actually begins this week. And so just to summarize, I'll begin with the consolidated sales tax, or CTX, revenues. And you can see these amounts, have been flat over the couple years, including next year's budget. The number came in at $31.2 million in fiscal year 24. And that's $1 million over the amount received in 2023. But it is slightly under the budget of $31.4 million. So that's a couple $100,000 difference. But, that's, we consider that fairly, nominal considering current economic conditions. You can see that the projection for 2025 is $31.6 million. So the projections have already expected these revenues to flatten out. And there are a lot of economic uncertainties right now, but there haven't been any red flags, especially in Southern Nevada, that would indicate or cause any concern, at least from staff's point of view and from discussions with our peers and our review of current economic indicators. And really the best indicator for the district for sales tax revenue is the amount of sales tax we receive every month. We recently received the June 2024 CTX revenue in August. So there's a 2-month lag between the actual month and the revenues that represent that month and when the district collects it. So the first revenue distribution for fiscal year 2025, which is the July 24 revenue, the district won't receive until the end of this month, September. And looking at that number when we receive it and benchmarking it against what we received a year ago at the same time will give us a good indication of what the trend looks like. And how we should plan going forward. And again, staff always monitors this revenue closely throughout the year. For property taxes, you can see here for fiscal year 24, we received $63.5 million in property tax revenues, and that is a 9% increase from 2023. It's also a 3% higher amount than projected for 2024. You see the budget's $61.6 million. And the budget for fiscal year 2025 is $68.6 million, which is another $5 million increase. The amount that was received in 2024 over budget is due to new construction coming online and coming in at a higher assessed value than expected. And so that's what we expect to see every year. Because tax rates are levied a year in advance, those taxes are due regardless, and whether we collect them or not is the only question. And we found over the years that Southern Nevada property tax payers have been very resilient. And again, there's nothing indicating that there would be any concern of collecting these property taxes. So the $68.6 million budgeted for fiscal year 25, staff expects to get, and depending on the amount of new construction that comes online in the fiscal year, that amount could actually be higher, just like it was for fiscal year 24. So moving on to general fund expenditures, you can see here that across every major category, expenditures came in under budget by at least 10%. Salaries, wages, and employee benefits are all under by about $5.8 million total. That's 10% less than budgeted. And that's due to the vacancy factor. The budgets for staff at 100%, and there are vacancies throughout the year, so that realizes savings for the district. Service and supplies was under budget by 13%. And that was across the board. There are areas from operating supplies to small equipment to travel that came in under budget. And again, those amounts are budgeted anticipating these events, but if they're not necessary or staff doesn't have the wherewithal or bandwidth to travel, for example, or participate in education or training, or they don't need certain equipment or supplies, we come in under budget, and that's also anticipated each year. Capital outlay represents the purchase of library media materials. And so you can see that came in $1.2 million less than budgeted. And the practice of the district is to budget library materials purchases at 15% of total expenditures. And so the Collection and Bibliographic Services Department really purchases what's needed to maintain a well-rounded collection. And so that was $11.9 million in spending for the fiscal year. This is a summary of the statement of revenues and expenditures for the general fund for 2024. I already went over the revenues and expenditures. You can see that revenues came in over budget by $3.8 million. We saved compared to the budget in expenditures by $9.5 million. And we were comfortably able to transfer $16 million from the general fund to the capital projects fund. And that still left an ending fund balance of $27.3 million, which is about 35% of total actual expenditures for fiscal year 24. Again, our practice in this current economic environment is to maintain an ending fund balance that's 15% of total expenditures. So you can see this is about $15 million over the minimum we would like to see at the end of the year. And the budget for fiscal year 2025 also anticipates this additional reserve. The 2025 budget already accounts for another $16.5 million transfer from the general fund to capital projects. And that was because we were expecting to see these savings and accumulation of these reserves in fiscal year 2024. And here's how those funds flow through to the capital projects fund. I'll start at the top with revenues. We received revenues of $3.6 million in 2024 in the capital projects fund. Part of that is a distribution that was received from the New Markets Tax Credit Program in the fiscal year, but the rest is above average return in investments in the capital projects fund. Because the district has been accumulating reserves in this fund in order to build the West Las Vegas Library. We've had that invested over the last period of time where interest rates have been relatively high. And going forward, we know that the Federal Reserve will be cutting interest rates beginning this month, and that's going to continue over the next year and a half. And so those investment returns are expected to decrease, but that's going to be staggered over time. And staff is still expecting over $1 million in investment income next year in capital projects. You'll see under expenditures that supplies and services is over the budget of $7 million, and capital outlay is under the budget of $27 million. But that's due to an accounting convention. Really, the $27.8 million you see here spent on service and supplies is for professional services and contract work that really is construction costs, and they will be capitalized. It's just that at this point in the year, when these financials are unaudited, it shows as being that's over under you're seeing. But really what should be focused on is the $28.9 million that was actually spent in total. And that's under the budget of $5.4 million in 2024. Here we have the transfer from the general fund of $16 million, and that leaves an ending fund balance in the capital projects fund of $46.7 million. And the absolute number seems, very healthy, but I like to remind the board about the reserves that are earmarked for two capital programs in particular, as building maintenance and the technology replacement program. We budget 2 years of reserves in those two capital programs, and that's about $7 million each. So we remove the $14 million there and account for the remaining expenditures for the West Las Vegas Library projects. That'll leave a smaller balance that really needs to be funded every year by the general fund. You can see here in 2024 that $16 million was transferred, and there'll be another $16.5 million transferred in 2025. But previously, I've showed the committee projections that look healthy in the near term, but we do see a trend of expenditures increasing at a higher rate than revenues are in the outer years, from 5 years on out. Again, staff is keeping a close eye on that as well. It has been difficult to project the future, over the last few years since the pandemic, but there is some stability coming to the economy and revenues in Southern Nevada coming into the district. And staff has always done a good job of controlling costs, which is the one area we can control actively. But we are, mindful of the revenues and our budget each year. And in 2025, you may recall that under the executive director's direction, there were no new positions created in order to, again, build the reserve needed to support the future projects of the district, which includes the West Las Vegas Library that opens in fiscal year 2025, which is really 1 year from today, this September. That's the projected opening date. And so despite having what looks like a large balance in the capital projects fund, ending fund balance, we are still seeking out other sources of funding to fund the capital projects like new libraries and other major capital initiatives. We talked about the New Markets program earlier, and there's also other fundraising that flows through the gift fund and also, is related to our relationship with the foundation. This is a summary of the gift fund activity for fiscal year 2024. This is also presented in the financial services report for the September Board of Trustees meeting. I included it here also because the trustees did have a question about the gift fund and asked for more detail for this fund. And so I wanted to speak to that here. You'll see the revenues or contributions to the gift fund that'll total a little over $300,000, about $320,000. So of course, this fund is relatively small compared to the major funds we just talked about. And in expenditures, we spent about $270,000 total. And this is just a list to give you some context in the types of programs that these gift funds are allocated towards. And the gift fund is different from the grant fund in that in the grant fund, there's usually a defined time period for spending the grant award. The district is awarded $1 billion in literacy programs, for example, and those funds must be spent within the fiscal year, versus a contribution or gift that is contributed to the district that doesn't really have a time limit. So the district may or may not expend all of those funds in one fiscal year. And sometimes the district may spend more than those funds to support the program that the initial gift was contributed for. And so I really wanted to highlight here what you'll see as foundation reimbursement of $143,000. This is how it's classified in the accounting system. I wanted to go over that because it is the largest portion of activity that we see in the gift fund. And we recently discussed this information with the Library District Foundation Board of Directors. So I wanted to update the trustees on that conversation so the committee's aware. There was questions about cash flow through the bookstores. Again, the projects or programs that the foundation supports is primarily funded by bookstore sales. And the bookstores across the library district are operated by primarily district staff. We have a volunteer program coordinator who supervises the operations across all of the bookstores. That's with the help of one foundation employee at the Sahara West Library branch. That's the district's largest bookstore. But it's not necessarily the largest revenue generating bookstore. The other branches with bookstores, such as Clark County, which has another large bookstore, generates just as much, if not more, depending on the month and what types of bookstore events are happening. There are a lot of sales drives that happen throughout the year that the bookstore operates. And what I wanted to highlight here is the bookstore sales are transferred to the foundation on a monthly basis. So that's what you'll see.
Loresto?
Yes.
What employee do they have?
They have an employee that works at the Sahara West Library branch who runs the bookstore itself and supervises the warehouse, which is where all of the weighted materials are distributed and sorted for sale across all the bookstores throughout the district.
Okay, thank you.
Yep. Yeah, and again, that person works in conjunction with many volunteers that's supervised by library district staff. And library district staff themselves actually spend a lot of time managing these bookstores themselves. We don't always have volunteers that are available, especially throughout the day. Like some of these bookstores are self-sufficient. Customers browse the bookstore stacks and they find something they like and they bring it to staff. And like staff themselves.
I understand how it works. How long have they had an employee?
That employee has existed for a few years at least. More than 5, I can say. I couldn't tell you the exact number of years.
Huh. Okay, thank you.
Yep, you're welcome. Going back to the cash flows here, I just wanted to show that because the foundation supported programs, the funds for that primarily come from bookstore sales, that there is an excess, a surplus of the amount that's transferred to the foundation monthly compared to what the district draws down. There's certain programs that the district relies on foundation funding for throughout the year. And as those events occur, the district pays upfront for these costs and then requests reimbursement from the foundation. And so that's what you're seeing in the middle column here is the amount of reimbursements requested for completed programs throughout the year by month. And you can see at the end of the year, the district requested $143,000 in reimbursement for different programs. And that is $108,000 under what was transferred to the foundation in the form of bookstore sales revenues. And so this shows that there is a comfortable amount of cash that's left over at the end of the fiscal year that gets accumulated in foundation accounts. Now, this isn't the only thing the foundation reimburses the district for, there are other projects that may come up throughout the year where the district will request a support for a new project that may be unanticipated. And the foundation, if the board approves it, will provide funding for that program as well. One example is the My First Library program, which is the Books for Babies program that took place at Sunrise Hospital. That was a program that cost about $50,000, and the district requested support from the foundation for that program. That was on top of any other pre-planned programs for the year that is within the foundation's budget and that the district requests support for. But even then, there is an accumulation or reserve, a balance that exists on the foundation's books that gives them the wherewithal to support those types of requests throughout the year. Again, I wanted to make the trustees aware of it because there were these questions that were raised at the last foundation board of directors meeting, concerned about cash flow and the amount of available cash, and also the nature of the actual balances, whether they're restricted or unrestricted, which is relevant because restricted refers to funds that are restricted for district programming, meaning that these funds are held by the foundation in order to specifically support directly programs at the library district, versus unrestricted funds that can be used for other purposes of the foundation, for example, overhead. And so that's a question that we discuss with the foundation board that will be resolved throughout the audit. Not only is the district undergoing its own financial statement audit right now, the auditors are also performing procedures on all of the library's affiliates, which include the QualityDs and the foundation. And so this is something that the auditors will evaluate and opine on. So we'll be able to get their thoughts on, these questions. One will just be the nature of the funds held, restricted versus unrestricted, the cash balances available, and any adjustments that need to be made. Financial services staff has only been preparing the financial statements for the foundation since fiscal year 2023. Prior to that, financial services staff only really provided the raw data, and the foundation had outside bookkeepers that maintained those financial records for the foundation. The foundation also had separate auditors, different from the auditors that performed the review of the library district's financials. And so the financial service staff is only now getting more involved in seeing the nuances of the financials for the foundation. And we've been helping answer questions from the foundation's board. And these are some of them. And I just wanted to outline that for the trustees. Are there any questions about the gift fund or any other areas I covered?
This is Trustee Sanchez. I have a question.
Go ahead, Trustee Sanchez.
Thank you. For my understanding, it's as though gifts that are given through the foundation, as long as they are not, if a company wants to give a gift to the foundation, and as long as they give whatever amount that they want to give, and there's not a line item where they're not specifically asking for it to be for a certain program, it's my understanding that that means it is unrestricted.
Yes, that's correct, Trustee Sanchez. The gift would have to be specifically restricted by the donor. And I'm looking for an example here. And I don't see one in this list. But again, you are correct. If the donor doesn't specifically designate a restriction, for example, I want these funds to go towards the enterprise library, or I want these funds to support Summer Challenge, then it is unrestricted, and the foundation has a lot more flexibility to spend those funds if they're not specifically restricted by the donor.
Yes, exactly. Because I would figure that that's where that would be more beneficial to the district. Grants are beneficial because they help, support specific programs when the grant funding is there and available, which is important. But I also think that a very important component that the foundation could do is provide resources and revenue, and then the foundation and the district can work together to decide what programs they would like to fund. I know, like, when there was the American CARES Act, you know, I think there was like, it was $500,000 or close to $500,000 for the homework help centers, just for that. So I think there's definitely ways to go about it. And I guess my question is when you said that there's nuances between gift funds of, you know, restricted versus unrestricted, I'm just wondering what are the nuances?
Yes, it's exactly what you spoke to. It's a question of whatever funds are still available in reserve on the foundation's books, whether they were designated for specific programs by the donors. Well, that's the question where it's clear in the case of the bookstore sales. Currently, all revenues from bookstore sales are considered restricted. They are designated specifically for district programming, as opposed to other costs not related to district programming. So even that is something that needs to be evaluated, because there is a question about how that was accounted for in the past. Again, this is going back to previous auditors and was not involving financial services staff, which is why we're asking the auditors in the current year to focus in and evaluate the nature of these funds, because the bookstore sales would be a clear example of restricted funds versus non-restricted, but it's commingled with lots of other donations and other funds that were accumulated over the years. So that's the part that would be good to have clarified.
Okay. Well, I look forward to that. Thank you very much.
Trustee Dukowski and Trustee Benavides, do you have any questions for Floresta?
No questions at this time. Thank you.
I don't have any questions either. I just want to appreciate tell you that the presentation, the information that you provided on this is very easy to understand. But I appreciate you explaining it as well. Keep on doing the good work. That's it.
Thank you.
Thank you.
Thank you, Trustee Dukowski.
And I'll echo that for us to thank you to you and your team for keeping on top of all this and for the presentation. So I'll let you close it out.
Okay. So thank you, Mr. Chair. That's all I had. If there are no other questions.
Perfect. Thank you very much. So if there are no further questions, then we'll move on to agenda item number 5, public comment. Ebony, has anyone signed up for public comment at this time?
No, there isn't.
Okay, well, close public comment. Moving on to agenda item number 6, adjournment. If there is no objection, I will adjourn this committee meeting at 2:37 p.m. And have a great day, everybody, and see you on Thursday.
Thank you.